Did you get an IRS CP503 notice in the mail? This is your warning before serious collection actions like liens and levies take place. But the good news is you still have time to act. In this video, I'll explain exactly what a CP503 means, what happens if you ignore it, and how to stop the IRS before they escalate your case. I've helped countless clients deal with IRS notices like this, and if you act fast, you can avoid the worst consequences. I'm Brad Paladini, a tax attorney with 12 years of experience helping people resolve IRS issues before they spiral out of control. A CP503 isn't just a simple reminder, it's the IRS getting more serious. A CP503 is the second notice the IRS sends when you have unpaid taxes. It means you ignored the CP14 and CP501, and the IRS is escalating its collection efforts. You now have a limited time to respond before the IRS takes more aggressive actions. If you toss this letter in the trash, here's what could happen next. You'll receive a CP504 notice, which is an intent to levy. The IRS might file a lien on your property, making it harder to sell or borrow money. If you continue to ignore IRS notices, the IRS can take money directly from your paycheck or freeze your bank account. And if you owe more than $62,000, the IRS can request to block or revoke your passport. If paying in full isn't an option, the IRS does offer payment plans. If you owe $50,000 or less, you can apply for a streamlined payment plan online. No financial disclosure required. You have to make sure all of your tax returns are filed and that you can pay the money over 72 months or 6 years. If you owe between $50,000 or $100,000, you may still qualify. The IRS may require automatic payments. If you owe over $100,000, most likely you'll need to submit financial documents to negotiate payments. If you truly can't afford to pay, the IRS might pause collections, but you have to prove it. Currently, non-collectible status stops IRS collection efforts. If paying would cause a financial hardship, you'll need to submit either an IRS Form 433A or a 433F showing your income, expenses, and assets. Can you really settle your tax debt for less? Maybe, but only if you qualify. An offer in compromise lets you settle for less if you can prove the IRS can't reasonably collect the full amount. The IRS rejects most offer in compromise applications, so I really recommend working with a tax professional who has been through the process before if you go this route. You can also file an appeal if you believe the IRS made a mistake. You can fight back. So if you believe the balance is incorrect, you can request an appeal. You'll need to provide proof of previous payments or deductions or incorrect tax calculations to prove that the IRS is in fact wrong. Here's the one mistake that can make things worse: ignoring the notice. Thinking the IRS won't take action is the worst thing that you can do. Many taxpayers come to us after the IRS has already levied their bank account or garnished their wages, and it makes resolution much more difficult than if they had come to us before any of that happened. You also don't want to agree to a payment plan that you can't afford. Defaulting on a payment plan makes things worse. It's always more difficult to renegotiate a payment plan. So if you're going to enter into one, make sure that you can afford the monthly payments. If you found this video helpful, please hit the like button and subscribe for more IRS tips and strategies. If you've received a CP503 and need help stopping IRS collections, click the link below for a consultation. My firm helps taxpayers negotiate the best resolution for their situation.